On voit plus ma fenêtre. So, good morning, everyone. Thank you for joining this webinar that we do as part of the European project I3 for biofertilizers. So today we will speak about public and private funding strategies and opportunities, extra for two types of potential type of entities, which are SMEs, but also startups in the biofertilizer, biostimulant sector. The idea is to send you some recommendations, but also to present guidelines and so on. We will be together for 2 hours until noon. So this webinar is organized by VEGEPOLYS VALLEY with my colleague Thomas Desferriers and myself, Clémence Monod. Here is the agenda for today. We will have 4 speakers. The first hour will be dedicated to private fundings with Wagner Moret from BGT Consulting and Théo Saint-Martin, which will give some return on experience from his personal experience as an SME startup, Veragro. And then we'll have a Q&A to answer the questions you may have for the 2 of them. And then we will have a quiz. And the second hour will be dedicated to public fundings, mostly European fundings. We will present with my colleague Claire Grosbois of VEGEPOLYS VALLEY some specific programs, Origin Europe, Eurostar, Ticket Funding, EIC. And then you have again a startup, Zimofix, that will present specific return on experience with Gilles Declerc. And then again, Q&A session for both of them and a quiz to finish. So to start with, a short introduction of the I3 for biofertilizers project. It's an EU project that gathers partners from many countries in Europe, but that are all public entities, but also some SMEs are part of the consortium. The idea is for the SME startups part of the consortium to scale up, to produce their biofertilizers and biostimulants. And the general goal of the project is to promote interregional cooperation, to support scaling up, demonstration, and go-to-market, and also to promote the bioeconomy for sustainable agriculture. So here is some timeline of the project with work package. So here today we meet as part of work package 6. So it's what you can see on the right: deployment of biofertilizers and establishment of a support program with recommendations. So what we will do is to organize mentoring sessions. Today is one of them, and another one was last week. So if you are interested in knowing what we have been talking about last week, you may reach out with us to get the slides and replay. Then we will write didactical materials that will be available also in the web, so you can have access to that if you follow the project, maybe on the social networks. And then a final event next year will be organized, so stay tuned. So some concepts to start with, just to note that biofertilizers, as we define them in the project, are fertilizing products made entirely from organic matter of biological origin. So it excludes mineral and fossilized sources of fertilizers. And biostimulants are products designed to stimulate plant nutrition processes independently of their nutrient content. So other people that register for today's webinar, we have asked them to answer this question: have you already raised or raised funds, applied for your public fundings? And we got some answers. we can see that some people have done both, some neither, none of them. Only a few private funds, and a lot of the participants have already applied for public fundings. That's it. Now I guess I can let Wagner present himself and introduce some definitions and recommendations regarding private fundings. I'll stop sharing my screen.
Excellent. Okay, it's my turn.
Yes,
as usual, struggling here with the system, but we will get there. Just 1 second. Okay, can you see my slides?
Yes.
Okay, brilliant. But okay, just 1 second, because I need to know where to change the slides. Okay, so can you see them?
Yes.
Yeah, okay, very good. Okay, good morning, everybody. It's really a pleasure to be here. Well, I'm not exactly sure how many people are in the meeting, but it feels like it's quite a good turnout, which is very good to know that there's a lot of people interested in what i3 for biofertilizers is doing as a project, and specifically in regards to private funding strategies in biofertilizing and sustainable agriculture. Well, I would like to start by thanking Clémence, Thomas, and the VEGEPOLYS team for putting all of this together. That's quite a lot of effort. So what I will try to do for the next 20 minutes or so is to give you a quick overview of the funding landscape in this space of biofertilizers and sustainable agriculture. I want to give you a quick lens of an advisor, because this is what I do on a day-to-day. Or now you should think about private funding, in particular from the perspective of early stage and pre-revenue startups. So if you are a company that are at very early stage in the process of fundraising, or if you are thinking about fundraising in the near future, I think that you are in the right session. So, I mean, by the end of this session, I hope that you get a good sense of some tips and tricks on how to deal with investors and what kind of approach you should have with them to basically maximize your chances of being successful in this journey. Well, before going into that, just a quick word about myself and about the company that I represent. So my name is Wagner Moraes. I'm director of a company called BGT Consulting Group. We are based in Brussels, and we are essentially an innovation and funding advisory company that supports smaller companies like startups, but also SMEs and larger corporations in essentially getting access to public funding. Well, in that journey of supporting companies around public funding, we understood that many of the companies that come to us, they have also an issue about private funding. So for them, often it's a little bit unclear if they should go for private or public funding. So we understood that we should do something around this topic of private funding. And so over time, we've been building a network of angel investors and venture capital funds. And so for those interesting cases, in particular in topics related to deep tech, we are very happy to support those companies. So about myself, I have background in management. So I've been working as an advisor in innovation, venture funding, and business consultancy for over the last 15 years. I have experiences evaluated in several innovation programs at European level, but also at national and regional level. And in parallel, I've been acting as an angel investor. There are some people that they do this for a living. It's not my case. I do it on a very occasional basis, and when we see very interesting opportunities to get involved at the early stage. So before going into the tips and tricks for entrepreneurs, I would like to give you a quick overview about the private funding landscape from two perspectives. Well, I would like to start with maybe with the bad news, and then we will end with the good news. I mean, on the bad news, I mean, one thing that probably you should know is that fundraising, either public or private, is a very tough game. Well, there's a lot of competition. There's a lot of good companies out there, and the investors, either the public or the private, they are more and more demanding about what kind of ideas to support. So you see that there are many studies that they suggest that the typical average of success rate in fundraising from institutional investors is between 2 and 3%, which gives you a very good sense how tough is this game. Well, another trend that you see lately is that the funding is extremely concentrated in certain geographies. So I see that we have here people from pretty much all across Europe. And you should know, if you are in certain countries, probably your likelihood of raising funding, it's going to be much smaller than in certain innovation ecosystems. I think that in particular in the agri-food ecosystem, Netherlands, France, Germany, UK, Spain are very good innovation ecosystems. So there's a lot of capital there. So probably these are the hubs where you can expect more easiness to get access to private investors. Another trend that we see is that the ecosystem is becoming more unequal. So as you probably know, there's a lot of hype these days around AI and software. Well, in general, not only because these companies, they tend to be more light capital than deep tech companies, but also because in terms of scalability in general, they scale very, very fast. And obviously all of that, it has led to a big hype into the sector and a lot of private capital flowing into this particular sector. And obviously the more capital you have into this sector, the less capital then you have for other sectors. And I think that this somehow is impacting slightly negatively the deep tech sector. Also, I mean, although biotech, it has been around for quite some time, the deep tech more broadly as an asset class is something relatively new. I mean, I remember that 10 years ago when I started working in that space, nobody was talking about deep tech. I mean, I think that deep tech is gaining traction in the last years. And therefore, I think that we are still in the, let's say, in the early stage of the whole potential of this sector as a whole. On the other hand, I mean, we have then the positive news. I mean, I would highlight here 3 or 4 things. The first thing is that, you know, agriculture, agri-food, circular economies, these are topics that are very high in the European agenda. I mean, for the very first time that we have a commissioner in Brussels that has as a title in a title circular economy, which shows the commitment of the EU in regards to these topics. Second thing is that deep tech, as I was mentioning, is emerging as a sector, as an asset class. And I think that this is very much driven by the effort that has been put by institutional investors like EIC, which has been funding a lot of deep tech companies, which leads to basically lowering the level of risk of these kind of companies. And in that process, they tend to crowd in private investors that they come in ventures where somehow the risk is mitigated by public funding. So these are very good news. I think that there are more and more institutional investors, but also, you know, early stage VC funds that are emerging into this space of deep tech, and I think that these are very good very good news for the biotech space as a whole. And then I think that also when you compare the dynamics of investment between EU and the US, I think that is quite favorable in terms of EU, I would say. I think that, I mean, many people have the feeling that the prices in US are completely inflated, which leads to basically high burn rates for companies. So if you are a startup with your operations in Europe, your burn rate is going to be lower, and this becomes an attractive proposition for investors. Well, in terms of opportunities, well, we see quite a lot. We work in this space for some time, and we see the topics around circular innovation technologies, biological alternatives from biofertilizers to biopesticides, industrial biotech. There's quite a lot that is being funded. We see also quite a lot of attention on climate smart and precision agriculture technologies. Then a big trend around regenerative agriculture, carbon farming, this idea of exploiting ESG business models. It has become under the radar of investors. So overall, I think that private capital increasingly moving towards deep tech agriculture. And there's a strong focus on climate-oriented investment. So if you can frame your investment from the climate angle, I think that this is a great moment to raise funding. So probably this is the most beautiful slide that I have in my presentation. Well, I asked ChatGPT to help me to draw this diagram. And essentially what I want to highlight here is the entrepreneurial journey from idea to sustainable profitability. And I asked ChatGPT to help me to highlight where are the stages where startups are most at risk of running out of cash. I mean, this in policy circles is known as the death of valley. And you have essentially two death of valleys. You have the first valley that is at very early stage where you have technology, but the technology is not completely proven yet. This consumes a lot of resources. So here a lot of companies are running out of cash and going bust. Well, other issue that you have at this stage, more from the policy angle, is that this is in general a period where you have huge technical risks. And the dynamics that we see between Europe and US is that in Europe, the investors, they tend to write smaller checks than in US on one end, and on other end, they tend to be much more risk averse than US investors. So while a US investor can write a check without having yet the validation of the technology, I think that these days in Europe it's becoming more and more difficult. So just going with a pitch deck with an idea to an investor in Europe, I think that's going to be a very hard sell. Second, we have the second valley, which is more at scale-up stage. Well, this is also known as a big critical area for Europe. Well, often you see startups that they manage to develop their products, they launch their products, but then when it comes to the scale-up where they need to go to international markets, they need to expand. This consumes a lot of cash, and in general, the VCs in Europe, they don't write as big checks as the American ones. So companies, they struggle to find funding in Europe and then end up often to go to seek exits in US or Asia. So I hope that this is give you a quick overview about, what is the journey. And here I would like to highlight two recommendations. I mean, the first one is make sure that you are talking with the right type of investors. I mean, deep tech or biofertilizer, sustainable agriculture is a very specific sector. Not everybody understands this sector. If you are developing technology, science-oriented technology, don't talk with the banks. I mean, I see often people come to us with interesting decks and say, well, we are going to initiate conversations with the bank. This is wrong. I mean, banks quite likely are not going to fund you if you don't have stable cash flows, if you don't have historical data as a company. So it's going to be a very hard sell to go and get some type of funding instrument from a bank. For this type of investments, you should be talking with deep tech investments, in particular from the biotech space and the agri-tech space. Second recommendation is that you should use the right sources of funding. For each one of these valleys, you have specialized VCs. Some of them, they invest more at first valley, some of them, they will invest more at second valley. So find the right one for your stage of development. Well, here I'm giving you pretty much the same sort of idea, but from a TRL angle perspective. So for those that are not familiar with the terminology, TRL stands for technology readiness level, ranging from TRL 1, where you have an idea, to TRL 9, where you have your product or your service in the market. So as you go along in this TRL journey, you will see that your profile, the risk profile of your venture changes quite significantly. In the beginning, tends to be much more around scientific and technical risk. Once you get closer to the market, then investors, they start talking, they get less concerned with the scientific technical aspects of your tech, and they get much more concerned about the market risk. Are you going to be able to launch this in market? Do you have the right the right permissions to launch the product in the market, etc., etc. So the recommendation here is, I mean, it's very tempting to go to an investor and say, well, you know, we have everything under control. I mean, in general, the investors, they are very skeptic about this type of risk-free narratives. So watch out. Don't try to picture the whole developments that you are doing as everything goes fine, because investors, they have experience in these things and they don't believe much in these risk-free narratives. So go with concrete ideas. Where are the risks? What are the sources of risk? And ideally be able to quantify those risks. Well, in this slide, I would like to give you a quick overview about the different type of investors that you have. Well, you know, when you think about investment, private investment, you should bear in mind what kind of investors you want to have on board. You know, investment, it's a little bit like getting married. So you have to make sure that you have the right type of investor on board, because they're going to stick around for quite a number of years, ideally 5, 10, 15 years. So typically you have around 4 or 5 different categories that are a little bit more, but let's simplify. So you have the business angels, that these are individuals that in general, they like the technology, with whom you as an entrepreneur might have a personal connection. These are a good source for early stage. Then you have the venture capital funds. There it's much more about institutional investment. It's much more about scalability and growth. So the venture capital funds, they don't invest in any company. They invest in those companies that they have huge upside potential. And they have clear mandates from their LPs, from their investors, and they don't invest in everything. They invest in specific type of companies. So make sure that you understand in what type of companies they want to invest. Then you have corporate investors. You should consider as well. These are the big companies, big corps that have strategic investment arms. And in general, they invest not because they are expecting financial returns from the perspective of financial, let's say, class, but rather from the perspective of how what you are doing as a company create synergies with what they are doing as a company. So in general, they invest in topics that are very related with their core business. And then you have impact investors that are mostly focused on creating a societal impact, sustainability impact, environmental impact, etc. So here the key recommendation is do the due diligence on your investors. Investors, there will be due diligence on you, but you have to do due diligence on your investors as well. Don't get anyone on board. Make sure that investors that you have on board are the investors that you want to have on board, and that they bring you the strategic value that you want. Some investors are very passive. They don't bring that much. They bring you the capital, which is not bad. But some others give you the capital, but they give you the network, they give you the experience, they give you the connections to the big corps, etc., etc. So here in this slide, I would like to give you just a quick overview. What are the different, the most value elements at each stage of venture development? So if we are at angel or pre stage, there are 3 rules. First is team, second is team, and third is team. It's everything about team. So what investors, they try to do is to look at the entrepreneur market fit. Do you have a credible team? Are you going to be able to scale? Do you have the credibility and the stamina that is required to grow a business and scale a business? Are you sufficiently resilient for what it entails to scale up a business? So when we move into early growth, there the kind of dynamics and the metrics that are important to investors are slightly different. It's much less about the technology, but it's much more about the customer. What are the prospects for the market? What kind of customers are you talking with? What is the value that you bring to customers? What is the customer acquisition cost? What is the lifetime value of your customers? All of these are important metrics that you should bear in mind. Then when we go to a scale-up phase, later growth, then here we are talking about a lot of financial engineering. It's very analytical part. This is where the important thing is essentially the enterprise value, and all of that is driven by, revenue growth, cash flows, EBITDA, profitability of your company, etc. If you are coming from the deep tech space, I think that there are 2 or 3 different elements to bear in mind. One is that you should have a clear strategy. How are you going to protect your IP? Second thing is that you should have in mind a clear idea about your regulatory strategy and roadmap. Be clear on how you are going to how you present this information to investors. And then finally, industrialization plan. It's very important. How capex is intensive is your industrialization plan? How much money you are going to require for scaling this up? Is that the system scalable, etc., etc. So here I would like to give you 2 recommendations. First one is make use of public money. For deep techs, I think that this is a very important element that gives you not only credibility, but also helps you a lot in the early stage in reducing dilution and the risk of technology. Recommendation, the next recommendation is more about the metrics. So when you talk with investors, make sure that you understand the metrics that are important to your customers. I give you here with some examples. Okay, speak the language of the customer. What are the benefits in terms of yield increase, in terms of cost savings per hectare? What is going to be the improvement for the soil health? What is going to be the impact in terms of reduction in synthetic fertilizer use? Well, many things can go wrong. For example, you might disagree with your investors on the terms of the investment, on the valuation of your company. You might disagree with your investor because you are not talking with the right investor. So the investor might decide not to invest on you because he feels that you are not sufficiently investment ready, or your financial planning is not sufficiently realistic or doesn't meet their type of KPIs, and so on and so forth. Well, what I want to stress here is, regardless the reasons why fundraising can go wrong, try to ask as much as possible feedback from investors. This is going to give you should treat the investors' feedback as a market intelligence, because this is going to give you interesting tips on how you can recalibrate, how you can pivot, how you can present your solution, your vision the next time you talk with investors. So Wagner, in this section, yes.
Sorry, Wagner, can you make it a bit quicker for the rest of the slides, please?
Yes, please.
I can give you like 5 more minutes and it's perfect.
Excellent. Okay, very good. So, well, here are a couple of recommendations. First of all, don't get bogged down with technicalities about your technology. Go straight into business value. Speak the language of the investors. Second, try to see what the investors are, in what companies they are investing. This gives you a very good insights on whether your company is potentially a target for them. And then try to build relations before fundraising begins. I mean, if you have connections with companies that have been already invested, try to get warm introductions because those matter a lot. Well, second thing is the aspect of traction. Well, funding is great. Don't get distracted with funding. Focus very much on showing traction, on getting customers signing your product. Build a credible narrative. Cover essentially that you are very clear in terms of what problem you are addressing, what is the dynamics of your industry, what is your solution, why this represents a good market opportunity, why do you believe that your technology is scalable, and what are the competitive advantages that you have that nobody else has. These are the kind of things that investors are very keen to hear. Then it's a lot about team. Be clear about your track record, about your capacity to scale up the business, etc. Build ideally a very credible team, ideally with some advisors that give you an extra boost of credibility as a company. So I want to speed up. Here I would like to give you with one key recommendation, which is around the pitch deck. I mean, it's very important that you build a very professional pitch deck. Investors that are used to see 300, 500, 600 pitch decks a year, so they see a lot. So you have to make clear that you have a professional document that where you can present essentially all these different aspects. So I give you here for reference some of the topics that I believe that they are must see in a pitch deck. If I could advise you in terms of what are the key steps in a very linear way that you should bear in mind to raise funding successfully, well, I will start with this. Validate your solution, try to raise public funding, build a clear business model, prepare realistic financial projections, don't overpromise, try to back that with clear assumptions, know those assumptions by heart. Try to build visibility and relationships before the fundraising starts. It's very important that you start getting noticed before the fundraising so that when you get to that stage, you have already some level of traction, and then approach the right investors. So final point around key takeaways. I would like to leave you with 10. Hopefully it's not too overwhelming, but some of this is already a bit repeated, but to bear in mind that you should start with ideally with non-dilutive funding first. You don't give up equity. That's great. Use pilots, demonstrators to start getting customer feedback and build credibility. Target the right type of investor. Build a strong investment narrative. Don't forget the regulatory aspect. Present a clear regulatory roadmap. How long the process is going to take. What is required for entering in different type of markets. Then build strategic partnerships early on. Communicate clearly the economics of your solution. Be clear about the KPIs and the metrics for you as a company, for the investor, but also for the customer. Funding needs. Be clear about why you need funding, how much funding you need, and what kind of objectives that will enable you to reach. Be clear about sort of a milestone-based round approach. X amount for laboratory validation, X amount for file trials, for international expansion, and so on and so forth. Well, two last recommendations. The first one is that you should understand venture capital as an asset class. VC is not for every company. This is mostly for companies that can be exceptionally large. The way VCs work is they invest in a number of companies. They know a priori that many of those companies will go bust. So they need to have in their portfolio at least 1-2 companies that will go big so that they can generate the type of returns to give back to their shareholders. And the final one, and this is very important, is Don't get distracted with funding. Build traction before you raise. Revenue is the strongest evidence and the signal that investors trust. If you talk to them and you say, you know, I have already a couple of LOIs or I have already customers in my pipeline, that will give you a lot of credibility. Last section 10, which is about some examples of leading investors in Europe. So you should bear in mind that you have some VCs that are very much specialized in agri-tech. I give you here the list. I would like to highlight perhaps Astanor Ventures. That's a great VC based here in Belgium. They raised 360 million in their last round a couple of years ago. So they have a lot of money to invest in great agrobiotech companies. Then you have many generalists. I wouldn't go there if you have very niche product. If you have something more around innovation, around your business model, platform, software-oriented SaaS, probably generalists are a good partners to talk with. Then public, we will have a section about this tomorrow or later today, but just to give you the numbers, EIC is the largest deep tech VC in Europe and probably in the world at the moment. Capitalization 4 billion. They have over 300 companies in their portfolio and they signed already agreements over 1.4 billion. I would like to leave you with one success story, in my view. This is also a company based here in Belgium, is Biofertilisants. They raised over 100 million in funding since inception. The last one, it was 1 month ago, where they raised 12 million in a private placement. Before that, they raised 55 million in IPO here in the stock exchange in Brussels. And in 2020, in the CDC, they raised 45 million. So these are companies operating in the kind of space that probably you are operating. Biological crop protection is their core business. And I think that's all. Probably I ran out of time and I'm sorry for probably being too long.
Thank you very much.
Thank you very much.
You can now share your slides, Theo. We will continue with you. And then if we have time, we'll have the question and answers for you both. So what I suggest is if we don't have time for question and answers, you can still send them in the chat and we'll answer by email, maybe afterwards or so on. So thank you, Theo. And thank you, Wagner. It was very interesting.
Thank you.
Yeah. Good morning, everyone. Do you hear me good?
Yes.
Yeah. So, I'm going to speak a little bit about our experience about fundraising. I will be quick. Wagner already talked about a lot of stuff that I wanted to speak about. So just quickly, Veragro, it's a company based in France, created in 2019. We are 15 people working at Veragro. What do we do at Veragro? Is that we are producer of biostimulants. So we recycle organic matter, mostly like horse manure, coffee ground, and it's going to be our raw material or the foods for millions of earthworms that we have. So we feed this organic matter to our earthworms and we harvest vermicompost. Why vermicompost? Vermicompost is the super product for plants. And the most innovative part of Veragro is the next step is that we have developed a unique process that we can extract and concentrate all the active principles of vermicompost as well as all microorganisms in a liquid format suitable for large-scale farming. So at Veragro, actually, we have like a range of products, the foliar products, soil product, seed coating products, and we go through distributors, so mostly agricultural cooperative and private one, as well as seed producer for the seed coating product. So Wagner already talked a little bit about it, but when to raise funds, equity, so raising fund, equity means dilution. So sure, before doing this, before opening the capital, prioritize grants, public scheme, bank loans, innovation loan, everything that you can find. And then after, when everything is running out, maybe it's time to raise fund. So first, is your market validated? Are you a B2C company, a B2B business? Do you generate recurring revenues? Or is your sale mostly like one shot? Do you have already attraction? Do you have already some clients, some field feedback? Are you making revenue? Your business model is already validated. Yes, still with by your clients, by your revenue. And one thing really important that the investors are looking at is your funding team. Is your funding team like complementary? This is one of main focus that the investors are looking at. And then also you have to anticipate. So when will you run out of cash? You need to define your financing needs and anticipate, because fundraising takes quite a lot of time. A little insight about the agri-tech sector. So this is insight in France. You must take this into account. Is it favorable or not? You can see like how the market has declined over the past 3 years. There is several reasons for this. In my point of view, the first one is the overall economic context, and also the confidence in the agri-tech sector by investors. It has been affected by several recent disappointments. And as you all know, this agri-tech sector, it requires long validation cycles compared to other sectors. So the return on investment for VC can be too slow. We used to say at Veragro, like, yes, in this sector, in the agri-tech sector, you know, a farmer, he will plant only 40 times in the field and harvest 40 times. So for him to change his habit, and for the distributor, for the farmer, yes, it's a tough game. So at Veragro, we closed our fundraising like 8 months ago. It was our second one. So the first one was we raised 1 million euro in 2023. It was raised mainly regional investor. So it was an early stage one. It was quite easier than the next one. So we managed this fundraising internally. The only support that we got was with our firm advisor, just help us to define the business plan. So yes, it was a much lighter process than the second one. Also, the fundraising was easier, like back at the time. And also when we raise like smaller ticket like this with smaller amount, a bit easier in my point of view. So last year we raised this, it was a next turn. So we raised 4 million euro. What I can say about it, we made the decision to work with a professional, with a fundraiser, specialized in fundraising, specialized also in M&A acquisition. He helped us a lot to support, to structure our everything, like the investor deck. So it's a presentation, help us to define the financial model, help us to reach all the VC, the investor, to put the meeting. Also, the data room help us also to answer all the question that investor had. So I think like for us, it was really helpful. We were more credible. It was saving time for us, more time efficient process, and much better than we could have done by our own internally. So a little focus on this last fundraising. We started the process in February 2025. So just to gather all the information to feed our fundraising guide that we hired. So to prepare the deck, the business plan, all the metrics to start to put some data in the data room. Then after, from March to July, it was meeting with investor. I think we met around 50 different kind of investor, VC and other. So it was like first starting with a small presentation, we call it the short deck. And then after, if they are interested, goes with a longer presentation, mostly ending with a lot of Q&A, so question and answer that we have to give them back. The hardest part for us, it was to find the leader. When you do a fundraising, you have to find the lead investor that is going to put the largest ticket, the most amount, and he will negotiate the term of this fundraising. So yes, we had a lot of people interested, but to find the VC that we pulled the largest amount was the tough game for us. And then once we had found it, it took us like around 1 month, 1.5 months to close the round. So also they had to hire an audit firm to get inside us at Veragro to see how we are structured, mostly financially, and if there is no bad indicator. So it was a go or no go for them. So the key lesson that we learn, as I said at the beginning, first, use the non-dilutive funding first. Anticipate the timeline. Yes, the fundraising can take up to 6 to 12 months. Something important to take into account, it takes a lot of time for founder. So during this period, you have less time to focus on your operational sales and stuff. Something really important, the credibility goes through networks. I mean, like a lot of investors has known us since like 3, 4, 5 years, seeing us at different shows, hearing about us. So it builds a lot of credibility. The professional support, you don't have to especially work with one, but my recommendation is like it's gonna save you time and make your presentation and everything more credible. And something important, stay also realistic on your valuation. I mean, like 3, 4 years ago, we saw some like startup SMEs raising like millions and millions of euros without any revenue. But now at this time, it's not possible anymore. So don't afraid them with like a too high expectative valuation. Okay. I finished.
Thank you very much. I don't know if it raises questions for the attendees. You may ask them on the chat. For now, there are no questions. But thank you. Your presentations were quite complementary, but also you agree quite kind of. So that's quite easy for the attendees to understand how. So now we can go to the little quiz that we prepared with Thomas. I can share it in the chat, or Thomas, you can. We'll go to a Klaxon tool. The idea for us is to get insights on your problems that you face, your challenge that you have faced. Okay, so it's in the chat. You can go to klaxon.com, go.klaxon.com, and then you write down the code that is in the chat. So now you can all have access to some questions. Once you have submitted, you cannot go back, so please make sure you are sure of your answer when you submit. I will share also maybe the screen. Sorry, that's here. The idea for us is to get to know more about previous and upcoming fundraising, and to dedicate some didactical materials to help you further. So we want to know your challenges and so on. We'll go together to check your answers. If you could all access. You can also access with your cell phone with the QR code. Please tell us in the chat if you have difficulties to access. I don't know, Thomas, if you want to share the answers or if I do so.
Yes, I was just waiting 1 minute to
Yes.
so that everybody can vote.
Yes.
There's 2 votes at this time, so
Yes. It's anonymous. You don't have to register your name or email, so don't fear confidentiality or so on. And in the meantime, if you have questions, don't hesitate to ask in the chat.
do you see my screen?
Yes. now we have 5 people who voted. You can still vote, but the answers are quite. They go for yes. I have already raised funds, and I will probably request more in the future. So it means it's as we have seen. It's not a one time and then it's over. It's most of the time it's linear, and you go for different amounts as the company grows. Okay. Now you also say you haven't and you don't plan to. So we can see that some companies, they don't want to do fundraising. They want maybe to grow thanks to public fundings and sales mostly. And yes, but you don't plan to request more. So maybe you have done enough. The company is big enough and so on, and not concerned. Okay.
It's quite balanced.
Yes.
Obviously, there's people interesting about this topic because they are here today.
If you want to comment, also Wagner and Theo, maybe you can also comment. Don't hesitate. So, second question: for which aspects of your development would private funding be the most important? Most of you say industrialization. Indeed, it helps to scale up. Also, commercialization and go-to-market and regulatory compliance. Then R&D, maybe you count more on public fundings for R&D purpose. Then on-field deployment also to gain strategic support and advice from investors. So as it had been said, also investors, they not give only capital, but also strategy, advice, value, and so on. And contacts also with corps and so on. So okay, it's quite balanced.
What do you think about these results, Wagner, with your experience?
Probably from my side, probably this is what I would kind of expecting. I think maybe I would expect a little bit more focus on the R&D side, but maybe people voted that way because they expect the R&D will be more mostly funded by public funding. So it depends very much on the specifics of your technology, etc. But I think that's fair assessment to put focus on industrialization, because I think that's where most of the capital needs are required. So yeah, it makes sense to me.
Me, from my point of view, like the last fundraising, we were mostly focusing on commercialization. As I talk a little bit about it, like it's a complicated market. You sell it first to the distributors, but after, if you have no one on the field to push your product to the farmers, you don't sell anything. So you need also some human resources with car, with stuff to go through field, through market, to see distributor, to speak about your product. So just from my point of view.
Yeah, maybe on the R&D side, I would just mention something that we sort of covered before, but I think that there's a wide range of public funding instruments out there to fund the R&D, the initial stages of R&D. So if you manage to fund the product development, not necessarily entirely, but a big part of that, so you kind of de-risk your technology. So when you are going to talk with private investors, you have already strong validation, you have the credibility of the public funding, and you say, well, these were the kind of demonstrators that you build during this phase, and now we are ready to move to the next stage. I think that a couple of years ago, you could do it the other way around. You have an idea, you are a PhD, you know a lot about the field, and you go to an investor and you ask for a check. Well, I think that these days, and as Theo was mentioning, I think that these days are gone. They want to see a little bit more than that. So try to invest time in the beginning in public funding, grants, regional schemes, national schemes, European schemes. You have quite a lot for whatever you want.
Okay, thank you. We asked them what was the most challenging step of fundraising. Okay, it's balanced. To approach relevant investors, to write the pitch deck and business plan, to contract, and some are not concerned with fundraising, but okay, for you, pitching is not the hardest part. Do you share this thought still, or is something other than the other?
Which step do you
Yes.
think is the most challenging for you? What's the most challenging?
I mean, for me, the hardest was to approach the relevant investors to know
Yes.
if they are into your ticket size. You know, some of them they only raised around 50 million euros. Some it's like early stage, so sometimes you're not totally in their scope of investments.
Okay. Thank you. Now we ask what type of actors could help you, could support you. So consultants and advisors mostly. So it's aligned with what you said, Theo, that you are really helped for your fundraising, and it helps you save time and build a stronger strategy. And then business angels, clusters and networks, and venture capital firms. Okay.
What doesn't
So-
appear in this question is a company. Should a company be supported by multiple type of actors, or just one specific actor to be in fundraising?
Thomas, I think that this is a good question. I mean, in my view, I think that there's a role to play for each one of these actors, and all of them, they can bring their unique strengths and uniquenesses in the process. I think the industry clusters like VEGEPOLYS, for example, I think that they can open many doors. They know the market, they know who are the players. This is a good place to talk with, a good partner to talk with. Then consultants and advisors, well, it depends very much what you are looking for. You know, if you are looking for advice around public funding, I think that you can get a lot of expertise there. If you started moving, just getting expertise for private funding, that it depends very much in what kind of model you would like to work with advisors. To have a credible advisory, probably you should be willing to, you know, to pay those services. Otherwise, you risk, you know, you pay peanuts, you get monkeys, a little bit, that sort of thing. Then business angels, I think that are a great way to start, because in general, the difference between business angels and venture capital firms is business angels, they put their money. And so if they put the money, there's a big probability that they're very interested in what you are doing. Otherwise, they wouldn't put it there. They would put it somewhere else. VCs, they have a lot going on. You know, they can have 50 companies in their portfolio. So even if in theory they can provide a lot of value, sometimes in practice that doesn't happen because they don't have the capacity, that they don't have the resources. In general, VCs, they are very light structures. With some exceptions, most of these VC houses, they are a couple of people. So that's something to bear in mind.
Thank you. I think there is a last question. Okay, now that we have been explaining a lot, what still is the most unclear that you want to know more about? And so negotiating terms, you say, also identifying investors. I think Wagner gave some nice ideas of who exists in the sector. Legal and contractual aspects. Okay, so I guess also investors, you tell me if I'm wrong, investors themselves give you advice on legal and contractual aspects. They will advise you as they follow your society. I guess you don't have to know everything about contracting.
I mean, I think that in general, when you have a lead investor, at some point they will put forward the terms and conditions for the investment.
Mm-hmm.
At that stage, you should have legal advisory to understand exactly what that it means. You know, some of the investors, they give you very plain vanilla sort of contract agreements, very simple to read. If you talk with very sophisticated VCs, you can find all sort of clauses, and those clauses can be very tricky. So you need to know exactly what you are signing, and it's very relevant that you are advised by the right people, legal advisors that are used to work in M&A, it's important, or angel investors that they've done it before. And if they have experience, they quickly go through your term sheet and they see if there's something that is a red flag that should be discussed. Maybe the business angel doesn't know all the implications, but at least signal the red flag, and then we'll ask questions to the VC, and that might lead to some clarification. I mean, that sort of process, but definitely this is an area where I would strongly recommend to have a legal advisor involved.
Okay, thank you. I guess now we can finish with this topic of fundraising, but you still can ask questions if you have. So now we'll get to the second topic of today's meeting, which is public fundings. So I will give the floor to Claire Grosbois from VEGEPOLYS VALLEY. You can share slides and start presenting some public fundings, and then we'll have the return on experience from Gilles Declerc, which is in a company just like Theo was for the first hour. Thank you, Claire.
Thank you, Clémence. Good morning, everybody. So, in fact, my name is Claire Grosbois. I'm a part of VEGEPOLYS VALLEY's team, and I will introduce this morning different examples of public funding that can be of interest to you through the European programs. So, to start with, maybe a couple of points of interest to understand why targeting EU programs to finance innovation activities. And it just makes the link with what Wagner was saying, in fact, that funding R&D activities may be of interest before going to private investors. And here, if you're approaching this first step or R&D funding via EU public programs, of course, this is an opportunity to have access to funding, not necessarily 100% of your involvement will be funded, but this is already an interesting participation, contribution to your activity. The interest is indeed to develop innovation capabilities, so that can be to develop practices, expertise, but also new solutions. The scope of the activities varies depending on the program. So it's important to target the right program and sometimes even the right topic. It's an opportunity, of course, to share investment and risks. Some programs are supporting collaborative projects, which means that you're joining a group of entities and sharing the single objective to achieve the target set when the proposal was written. Then it's also an opportunity to expand your network. Of course, when you're joining a consortium, you're benefiting from new contacts with your partners. They will identify you in your actions. And that's also an opportunity to explore new markets whenever the project creates the opportunity to create new links with operators that are located on markets of interest for your entity. And then obviously your visibility will benefit from this participation. And if other partners are thinking of building a new project on the topic where you were first involved, there are some good chances that you may well be involved again. So now the next question is how to best spot the right program for your research and innovation project? Well, there are a couple of parameters that need to be addressed first internally. The ambition, where are you at internally, and what is the TRL, the technology readiness level that you want to target in this project? Different programs with different TRL targets. So this is the first point. The timing, when do you want to join the project? When will you have the resources to join a project and benefit from this funding? Is it within 2 years, within 5 years? That will in fact help you anticipating your action to participate to a European project. Then the willingness and the readiness to collaborate. Are you ready to join a collaborative initiative, or rather to participate individually and join individual programs? Linked to that are the resources that you can provide. So the proficiency in English can be a prerequisite indeed for most of the programs, since consortia will communicate in English indeed. Which are the distinctive skills, expertise, maybe even infrastructure that you can provide to a consortium? It will help also to better identify which type of contribution you can provide. And what is your financial capacity? In fact, we mentioned it, funding cannot be up to 100% every time. So we need to make sure that you have the financial capacity to support part of the project realization. So today we won't cover the whole spectrum of European programs, but I'd like to focus on 4 different types of programs that are particularly relevant for SMEs. The first is the Eurostars program. It targets innovative SMEs. Cascade funding are a second type of projects in limited in terms of limited actions and limited in time as well. So shorter projects usually. Then I'd like to touch large-scale collaborative projects. These are the usual European projects that you may have heard of, and in fact require some specific parameters and ability before jumping into this type of project. And last, I will mention the EIC Accelerator. The EIC Accelerator is an individual program that can provide high impact on your activity. So to start with, the Eurostars program. This one is targeting targeting SMEs which are very active in R&D activities. So in fact, it targets international activities because not only Horizon Europe member states are eligible, but it's open to other countries such as Canada, South Africa, South Korea, Singapore, Israel. And so it can provide the opportunity to get a first step on a new market. To build a Eurostar project, the consortium needs to be of minimum 2 different partners from 2 different Eureka eligible countries. You will have the list on the following slide. And it needs to be led by an innovative SME. It doesn't mean that this SME needs to provide a track record of R&D activities, but indeed it needs to be interested and have the ambition to collaborate on R&D innovation with international partners to develop new products, new services, and for the European and global markets. Interesting to notice, it's open. It means when you're discussing European programs, you don't have a specific topic or fields that needs to be addressed. So all topics are welcome. Which are the type of actions to be targeted? Well, here you have to start with a technology readiness level that is at least 4. to achieve a level 6 or 7 within the project. Your project needs to be then closer to the market, and the development phase should not exceed 3 years, with commercialization taking place within 2 years once the project is completed. This is one prerequisite to bear in mind whenever approaching this program. The duration of the project then should not be more than 3 years. Regarding the funding arrangement for Eurostars, you will benefit of 2 open calls every year, each ending in March or September. So that's why there is currently a new call that is open, and if you're interested, submissions are possible until 10 September 2026. Fundings are provided in the form of a grant with a minimum budget that should be of 1 million euro. There shouldn't be a single country or partner that would represent more than 70% of the project's total, important to bear in mind. And the funding is provided by operators, which means that each country that is a partner of this funding program will operate via a national operator. For instance, in France, it's BPI, but each country benefits from an operator which defines which are the funding parameters. So for instance, in France, SMEs are eligible to a 40% funding of their action within a Eurostar project, and this percentage will depend on the country and the operator. So get in touch with your operator or R&D, national R&D support entity. They may well provide you more details regarding the level of support to the SMEs. Interesting for these funding rates, in fact, 25 to 30% of applicants benefit from the funding. This is a quite high success rate, which you won't see very often when we're discussing European programs. Wagner touched upon it. In fact, most of European programs are very competitive. This percentage, though, dates back from a couple of years ago, and it has slightly decreased recently, but it still is a very interesting funding opportunity if you are matching the different criteria that I mentioned. So here you will see the list of eligible entities. Interesting if indeed you're interested to explore new markets. And then I will provide the link to the operators so that you have direct access to the funding parameters for each country. The second type of program that I'd like to touch upon is actually not directly a program, but these are cascade fundings. Cascade fundings are envelopes that are open in large collaborative projects, which means they are type of sub-projects, limited in time and in amount. Each call of a cascade funding will have some specific parameters. So they can fund prototyping activities, but there can be also training, networking activities. The scope is quite broad and will mostly depend on the larger project in which this sub-project is contributing. The types of actions will then be quite broad as well, but for SMEs, for instance, it can target SMEs that are active in agri-food and are particularly providing solutions for biomass valorization, or food tech, nutraceutical startups using agri-food waste streams as a biomass for creating new ingredients. So as you may have understood, it's really depending on the call. Funding criteria, usually it's a 60,000 euros envelope that is granted for a 1-year action. It will be granted either to one entity, or the envelope can be a bit higher, up to 120,000 euros, for instance, if it targets small consortia. You will find details on all the different cascade funding open currently on the links that are providing on the screen. But just for you to have a concrete example of what I'm talking about here, you can see here a table that is summarizing the different open call of Cascade funding, which are the target entities, the type of actions that are targeted, the budgets that are available. And here, for instance, for the first call, you can see that it's way beyond the 60,000 euros that I was mentioning, the project duration, the type of consortium that is required, and then the deadline for application in case you're interested. So it's really something to keep an eye on, because I believe this is a good first step to participate to a European project and to experiment the process of a European project. So indeed, feel free to have a look at those. The third type of program I want to present today are large-scale collaborative projects. There are the typical Horizon Europe projects that you may have heard of. They are collaborative projects with large consortia, usually ranging from 10 to 15 different partners. So you have to be ready to join quite an intense process with a variety of different entities, because in fact, these consortia will integrate entities that are ranging from research, training organization, technical center, association, micro-enterprise, SMEs, large groups. Well, the topics more and more are requiring for a multi-actor approach, which means a high representativity of different entities within this consortia. Even though indeed there will be many partners, well, the prerequisite is a minimum of 3 independent partners from 3 different member states. So, but this tends to be indeed most of the time very beyond this parameter. The type of actions that will be targeted tend to be very specific. These are thematic calls. So the actions that need to be developed within the project is very much specified in the call text. The scope, the entities targeted, the challenge that need to be addressed are mentioned. So indeed, before entering in such an initiative, it's important to make sure that it matches your internal interests. Research and development activities will be carried out within 3 to 4 years, most of the time. And the intensity of your involvement will depend on the type of participation that you have. You can well participate during 1 year very intensively every month, or have a more transversal role and then be involved with within the project during the whole duration. The funding arrangement will depend on the type of the call. So it may sound technical. I will present just after that an example of a topic to make it a bit more concrete. But in fact, typical calls are going to be either research and innovation actions or innovation actions. Research and innovation actions means that they will target a TRL that is rather between 5 to 6 at the end of the project. So here research centers tend to be very important and have an essential role in this project. But the interest is that the funding level is higher for SMEs in that case, and you can benefit from up to 100% of your contribution that is funded, plus 25% of indirect cost. If we're on innovation actions, the TRL targeted then will be higher. It will range from 5 to 6 at the beginning to 7 to 8 at the end of the project. And here for SMEs, the contribution and funding can be of 70% plus 25% indirect cost again. So still quite interesting, I believe. An example of a topic. You can see here on the screen a topic that could be of interest to you. It's open for project submissions in 2027 with the title Strengthening Plant Health, Addressing Emerging Plant Pest Risks. You will notice that there is a kind of a code that is mentioned before the presentation of the topic. And this is quite key because every year you have about 100 different topics that are open. So it helps to make sure that you're discussing the same topic whenever you want to share with your network your interest for an open call. Then you will see different categories that are mentioned. The expected EU contribution per project, very important. This is where you have information about the budget available for the whole project. You can see here that it will be 6 million euro per project dedicated. The indicative budget below indicates the total budget, which here reveals that there will be 2 projects eligible, each of 6 million euros there. And the type of action, here we see research and innovation action, which means funding for SMEs will be up to 100% plus the 25% overhead, so indirect cost. And then below, well, it's often 2-3 pages of description of what is expected in the project. And here the expected outcome are very specific. This is what the project needs to demonstrate. You have then the scope, which are the links that need to be created with EU policies, EU initiatives, links with other existing projects, the challenges that need to be addressed, and so on. The list can be quite long, but this is important, in fact, to have a careful read of the calls. And then when you're invited to contribute and join a consortium, to have a clear view of what the coordinator wants to develop to make sure this is aligned with your internal interest. It should be it is very important because you don't want to dedicate time to carry out something that is not key for the development of your entity. Something that may be of interest is how you can benefit for these large collaborative projects. Obviously, you can be the coordinator. I would advise to have already had the experience to be partner in a project before taking this role. But if you had some very successful experience at the regional, national level, well, sometimes a consultant can support you in this role, or you can feel to have already the resources and the ability to take up this role, in which case, go ahead. This is the best position to make sure that it matches what you want to demonstrate in the project. You can otherwise be a partner. Then the trick will be to make sure that you identify first a consortium that is emerging on this topic, and second, to make sure that the orientation matches what you want to do in the project. Another way to participate is a subcontractor. Here, it may be interesting, again, you've heard of a project or you have a partner of another entity, it can be a researcher, technical center, which is part of a project, and they are going to need a subcontractor to provide a specific expertise at some point in the project. It needs to be limited in time and in budget. And here, the subcontractor has the advantage to have a full compensation for his participation, of course. But in the meantime, you won't have access to the whole outcome of the project. You will just be participating for timely and won't have this first experience really of a European project. But it can be a first step. Cascade funding. In fact, you can be a beneficiary of a cascade funding that we mentioned previously. You have many different types of projects. So then it's a good way to follow a project, have a contribution for 1 year, for instance, and already have a view about how it goes for such a limited contribution. And a service beneficiary, well, this is a bit different here. We're talking about people who are following projects of interest. It can be about the high 3,4 biofertilizers for instance, you're interested in what is being developed within the project. So you're checking the website, you're following the project on the social media. This is also a way to hear about the different innovations that are developed. I'd like to approach now the last program, which is the European Innovation Council Accelerator. Wagner touched upon it. This is a very powerful program that is targeting startups, SME, small mid-caps that are seeking to develop, deploy, scale up their solutions, which need to have a high impact and have the potential to create new markets or disrupt existing ones. So we tend to talk about disruptive solutions here, disruptive innovations. So here we're talking about development of solution with a TRL beyond TRL 6. So you're building on the scientific discovery or technological breakthrough that have already been identified. And here, in fact, we tend to talk about deep tech because this is the type of entities that are targeted by this program. Why targeting this one? Well, most of the time, this is because you need to have public funding involved because the funding that is needed is too high for private investors, for instance, only. So we talk about a high risk, high gain approach. The type of actions that will be developed are twofold. They can be either open, there is no limit in terms of action or fields of activity that are targeted, or they can be thematic. Now you can see on the screen 5 different thematics that can be addressed by the EIC Accelerator. And in fact, if you identify yourself very well in one of those, that's an opportunity to dip into that, because in fact, you will compete only with other entities that are applying on this challenge. So that can be, in fact, an asset. About the funding, the grant should be of a maximum 2.5 million euros and can be completed with investments. So this is one of the particularity of the EIC, these 2 components for the funding. The cost to be covered, the eligible costs, and that's quite important as well, can reach 70% of the total cost of the project. And here, small mid-caps will only be eligible for investment. Plus the grant, sorry, not grant only. And here you can see the different type of investment components that can be provided for this type of project. The submission process is quite demanding. This is a 3-step process. The first is a short proposal. That's going to be company information, a pitch deck, a short video that is presenting what you want to do. And this can be submitted during the whole year, anytime. But then there is a first selection that is done, and the lucky ones can then submit a full proposal, and the proposal will be then of a pitch deck again, but with a proposal that is much more substantial and in describing what are the actions that will be developed thanks to the EIC funding. And here, every 2 months, you have the opportunity to submit the full proposal. And in the end, if you're still the happy ones that are eligible, you will have a final interview with the EIC jury before being granted the funding for the realization of your project. So I draw your attention on the fact that the success rate is quite low, below 5%, but indeed is worth it considering the significant amount and the very individual project that you can submit on this one. I'd like to finish by presenting here just a small timeline. It shows you which are the deadlines for submitting the full proposals. These are the batches and the interview sessions in case you're interested. But in fact, whenever approaching this type of program, as any actually, I would very much recommend you to also be supported by some consultants, clusters, that can help you in the structuration and also test of your proposal. I won't go into details on that slide. This is just a sum up of what I introduced right now. A few tips maybe to close. Key is anticipation. That's why I was talking about timing before. When do you want to take part to a European project? Anticipation is key to develop your network, mention the program that you're interested in, and plan in-house as well how you are considering taking part to these different type of projects. The assessment of the resources will also be instrumental. Whenever you are talking to a potential partner, you need to directly identify what type of contribution you can provide. And of course, you need to make sure that this is aligned with what you need to develop. So it's important to keep that in sight whenever presenting your capacity to contribute to a European project. Then, what are the parameters of a project you would like to, you would be ready to join? We mentioned that earlier. Contact your support entity on innovation projects. It can be clusters, it can be consultancies, technology hub, whichever, but make sure you have the relevant support that is needed to optimize your chances of being eligible to funding. And even on the project, it's not just your participation, but it's also the whole proposal. And then map your network. You have a network of partners. It can be regional partners, national, European, but map who they are, what they can do. Maybe they're also interested in participating to European projects. Share with them your interest. It will lead to the creation of a core group that then can contribute to a first step to a project. And to finish with, what matters more, the objective, the prerequisites of the call. Make sure that you're ticking all the boxes of the prerequisites. This is very important when you're applying to such competitive calls. The evaluation criteria, I don't have the time to delve into that, but for each of the programs, the evaluation criteria will tend to be on excellence, impact, implementation. This is quite key to have that in mind as well, and get a critical review of the proposal from experts. At VEGEPOLYS VALLEY, we are happy to support our members in this process to read the proposal and spot where there can be some gaps that needs to be filled before the proposal is submitted. So I will close it here, but thank you for your attention.
Thank you very much, Claire. I hope it really helped the participants. Now we'll have the return on experience from Gilles from Zymofix Society that produces also biofertilizers. He will give his return on experience on public funding. I don't know, Gilles, if you can open your mic and share your slides also.
Can you hear me? Can you hear me?
Yes, but we cannot see
Yes,
you.
okay. You cannot see, I can see myself. So.
It's just me. Do you want me to share your slides or you add them?
I can share myself, but you
Yes,
can see
okay.
and hear me clearer. I can start, eh?
Yes.
Right? Yes. Okay. You should be able to see my presentation now. If you confirm, then I can start. All good?
So for my part, it doesn't work. Maybe for other attendees it works. No, okay, now it works. Perfect.
Okay. Good morning. Thank you for having me. I'm Gilles. I'm part of the Zymofix team. It's a Belgian biotech startup But maybe before jumping in, let's shortly introduce ourselves, what we do. So at Sufix, we've developed a manufacturing technology where we transform residual biomass streams. Think of digestate, compost, manure, always one at a time, into microbial products, mostly for agriculture. We have some adjacent industries where we focus on. And how we do this, we have a thermal pretreatment process, and after that we do solid state fermentation on the sterile substrate that comes out of the thermal pretreatment, where we inoculate with the microorganism the customer wants to grow. So our mission is that we want to produce cost-effectively sustainable microbial products. We don't do strain selection, and we don't do sales and distribution to the end customer, which is mostly the farmer, but we do work on the manufacturing technology where we think we have a good edge by combining those two process steps. So that's in short what we do. Happy to give more explanation on this, but I can also ask to discuss a little bit the grants and our grant strategy we have done or managed internally so far. So again, Sufix exists almost 4.5 years now. We are now with almost 30 people, and we have run a couple of grants already in parallel, and we have one larger grant upcoming. So in total, we've done or are doing 5 grants. You can see the time span when it started, when it ended per project. A couple of them were on the Flemish level. Flanders is a part of Belgium. A couple of them were our Horizon projects, such as I3 for biofertilizers, which we're very happy to be participating. And we also did EIC, on which I'll explain a little bit in a couple of slides. All of the grants have different funding percentages. It's very important. My role is mostly financial, administrative, legal, so I need to take care of those types of things. But we also had a couple of unsuccessful rates, not that we had 100% success rate. We've applied for a couple of other grants in the past, so you can see for which programs or calls that we applied over the last years. Our strategy for public grants has evolved a lot, I would say, in the past. That's not so long ago. You could describe it as more a little bit spray and pray, whereas as of this year, a little bit last year, we are developing more of a strategy.
Hello, Gilles, can you hear us?
Yes. Yes.
I think that there's a little problem in the sound. I think that some people are complaining on my side. I share the same.
Okay.
Cannot hear very well. Maybe you have to speak a little bit closer to the microphone. I don't know. Sorry for interruption.
Yeah. No. Is it better if I speak a little bit louder? Hello?
Yes, seems to be better.
Better? Okay. So in the past, our strategy could be described as spray and pray, where we applied for multiple grants at the same time, whereas now we want to refine that a lot more, where we have applied the 3 horizons model, where we've defined every topic that we want to grow into one of these 3 horizons. First one is what we already do, so that's Horizon 1. The second one is business that we see emerging, and the third one is new paradigms that we see in more than 5 years' time. There are also topics that we clearly identified as not in our 3 horizons, and those we also excluded for further grant assessments for now. Horizon 1 and 2, if the topic is in there, we apply a minimum funding rate, because we also have funds, but that's limited. It's an African company. So every project that we want to apply for, it needs to contribute to reaching future milestones or scale up our technology. It could be flagship projects, could be demonstration projects. And if the funding rate is high, It needs to be defined in each horizon 3, can be 1 or 2, and then it can be more on fundamental research, think of soil health, heavy metals, IP projects, but also product development. How do we do this? We try to review the full work program per cycle, per sort of call, what could be fit in advance. So we try to be more strategic around that than before. So what detail during the application phase, Claire already mentioned, but we read the work program. I can always advise it to reach a work program prior to applying. So we search for call topics that are aligned with our company scope and our strategy. We review the conditions to apply, specific requirements, what the contribution would be, and also how many projects are expected to be funded. It's always specified in most calls. If it's a rather small call, it also says something about the competitors you can expect. Always important, find a good consortium that aligns with your company values and vision. A good consortium is balanced, and you should find your natural role in that. And second thing, and that to me is very important, that you should try to articulate which actions or value inflection points that would impact your organization or company or department the most, that you could fit in such a grant. And how you can articulate this into milestones and deliverables. Those grants are around those types of actions. And you should try to articulate this into a work package together with the grant consortium. From my personal experience, is the closer that the grant program is aligned with your company value, the more pleasant the actual implementation phase is. Sounds logic, but it's often forgotten by companies applying for grants. During the implementation of a grant, we try to manage our cash flow per project strictly. Grant money is always nice, but you should be aware that there is always a co-financing, or mostly there is a co-financing need. So you should find unallocated funds as soon as possible, because also the grant tranches, the grant payment comes in tranches. So you should assess the cash in and cash out in terms of the timing. We also always try to plan and structure our work as soon as possible. Develop the tools. Mostly it's in Excel, but you need to report on a later stage. Manage timesheets very early. Assess your financials at least every 3 months. Do soft close, and try to go for midterm reporting, even if it's not necessary, because it's always nicer if you have already written a couple of things per work package, task, whatever, and don't wait until the end of a project. That's not so pleasant for your organization to do. A couple of slides on EIC. So we also have been very fortunate to have been selected and are already done EIC Accelerator. That was a really game changer for our company. Some thoughts on EIC from the company's perspective that I can give, or I can give. It's very important, and so also applies for other larger grants during the application phase, or you go all in terms of effort, or you don't apply. Those types of applications are really intense, and with every hurdle, your chance of success also increases. So put in the effort needed per stage, and it's quite intense. Don't think that you can do this next to your work. Really allocate or free up people's calendar in order to apply. It's super competitive, so attention to every detail is strongly advised. You would think that for some parameters it's just some checkbox they want to fill, but then you stage description that goes out. Coherence is very important. And assess carefully up front if you want the help of a grant writer or not. We always receive quite some questions on this. We did collaborate with EIC with a grant writer. In this case, it has been very beneficial, but we weren't also selected for other calls with other grant writers. So it's not a guarantee for success, but it helps. Whenever you're assessing grant writer ish consulting services. Ask them for the success rate of the specific grant that you're looking for. Not every grant is the same in terms of application process. And last but not least, the face-to-face interview has been quite stressful, but we prepared a lot for it. Consider it as some sort of an oral exam. Assign topics per person, answer to the point, and really learn by heart the usual questions you would expect as a company owner or a participant. You think that you master your topics, but you get very little time frame, and a studied answer is better than trying to improvise on your topic during those face-to-face. That doesn't help. Implementation phase. So we've completed EIC in January this year. Some learnings that we've experienced. So EIC is mostly quite short program. For us, it was 2 years. I still think it's 2 years, or at least the granting is 2 years. For instance, at start we had only 4 people in the company, but we had 240 person months planned for. Project duration was 24 months, so you can immediately see that this was a little bit of a stretch. So we had to evolve our organization rapidly. Has turned out well, but it's important to know this in advance. Really know your grant agreement and your obligations, not by heart, but really know what's expected by when for whom. And also in budget. Your spending is obviously controlled. You need a certified financial statement, but know the boundaries of your budget well in advance, because only 2 years you're discussing larger amounts. You should consider it thoroughly. Also, the review meetings, prepare meticulously, consider them as important. The project officer can be a real help, but it's also nice for him or her if you really put in your time and effort in those review meetings. It helps a lot for final reporting and also the later delivery which you sent. Maybe last, it's a super nice mechanism, EIC Accelerator. It can really help your company grow through non-dilutive support, but still careful planning and executing like any other EU-funded project is our experience. I think that was it. If you have any questions, feel free to reach out. I hope I was somewhat understandable. I'm sorry if my mic was too...
No, it was clear in the slides, so thank you for the presentation. I guess it gave very practical insights and recommendations, so I hope it will be interesting. There are no questions in the chat, but well, thank you very much. I guess now we can go to the little quiz that we prepared, and as we will see the answers in the quiz, we will maybe give some more tricks. So quiz code I give you in the chat. I'm writing down. So you go to again, you open internet, you go to go.klaxoon.com, and then there is a code. If you can just copy paste the code, and then you will see you have a few questions about your previous experience of all the attendees. Now we expect that all the attendees can join. Also, Gilles, and Theo, you can join. Very quickly, I will share this up. You can access also with your cell phone, your mobile phone, by you can use the QR code. You can flash the QR code with your cell phone if it's easier this way. And then we will show to all of you the answers. And as we go, we will give you more recommendations. I hope everyone could join the quiz, and you can go. Be careful because you cannot go back. Once it's submitted, it is submitted. So just be careful regarding this. Can you tell me, Thomas, how many people joined already?
There's just one vote.
Okay. We can maybe vote all together. Maybe I'll let you present and share the first question.
Yes. Okay. So we have a majority of people who already have participated in public funded projects. Or attendees.
Okay.
I will go to the second question.
Yes.
I'll let you read it.
How do you stay informed about calls for projects? Because it's always changing. Some are the same every year, some are different every month. So we need to stay informed. So we can see that most of you use the information of other organizations. So it's peer-to-peer exchange with other societies that you work with. Some you have dedicated teams. Okay, so it's interesting. Inside your society, you have dedicated members designed for following up. Okay, industry reports, also newsletters and specialized platforms. And then some other use consultants and advisors or clusters and professional networks. So advisors and networks are interesting because they will keep you informed about new calls that are open, but also they will help you answer to these open calls, as we mentioned before. So it's interesting. There are many ways to stay informed, stay tuned. I don't know if you want to share more experience as the speakers of today's session, or it's clear. No, you can also, some people also register for newsletters that appear in the mailbox. Okay, now next question. What is your primary motivation for seeking public funding opportunities? So it's mostly for R&D purpose, and then also commercialization and go-to-market, and also expanding market reach or partnership. So that's what Claire, sorry.
It's complementary from the answers to the question about private fundings when R&D was lower.
Mm-hmm. And to expand partnership also, it's one nice thing about collaborative projects is that you get to know other partners and then you get insights on how they work, what R&D they do also in sometimes other regions or even in other countries for your projects. Okay. Now the biggest barrier or challenge. So most of you say that it's difficult to identify suitable calls that are aligned with the project. And then suitable consortium. Then there is the complexity of the procedure to apply, and then a low success rate. I don't know if you want to comment, Claire or Wagner, for that. So.
Go ahead, Claire.
Success rate, it depends on the...
I think that for the calls, really feel free to reach out to the clusters or consultancy. If you already have a project in the pipeline, we will be in a position to provide you an overview of the opportunities, where to submit, what suits your project. That's probably a first advice. Because if you already have the core group and a coordinator, really keep us posted as soon as you can, because we can also support you whenever you need to build the consortium, identify the European partners, for instance. So the earlier, the better, definitely. The low success rates, well, yeah, we are all facing that. Well, the thing is that the only chance to win is to participate. So you have to balance the right timing, resources available, and if you're ready to take the risk. Bear in mind, nevertheless, that even if the project is not funded, it doesn't mean that there won't be another, there can be, for instance, a new topic. You just need to adapt the proposal, change the orientation, and then you can submit again the proposal. So that can be an opportunity. Of course, it depends if it was on a very detailed topic or if it was on a generic program. And then I think you joined a network, you gain some visibility. It's something that you achieved thanks to participating. So there are some positive side effects, even though you're not funded, the project is not funded.
Thank you.
And the last
Okay.
question.
What scale interests you the most? Okay, so you are all interested in EU projects, but also regional, national are of interest. So it's interesting. I guess you could quote several of them. So, okay. Thank you for your participation. I think now we will share with you the recording and the slides so that you can go back and explore further what everybody could say. And then you can also reach back to Wagner, Claire, and so on to get more, to answer your questions personally. So thank you very much to all of the participants and speakers of today's session. And yes, have a good day.
Thank you, Clémence. Thank you, everybody.
Thank you.
Thank you.
Bye-bye.
Bye.
Bye.